All right, everybody, thanks for sticking with us. We've got just a little bit left for you today in this bit of programming, but coming up next, we have Mr. Omar Khamwe. He's with Parallel Finance, where he's the business development lead, and this guy's got street cred, goes all the way back to the World Bank, and he's even got some Wall Street experience. But primarily within crypto, he comes from the Dashcore Foundation. But he's here today representing Parallel Finance and how Polkadot helps bring DeFi to 1.3 billion people. So, Omar, welcome, and please take it away.
Thank you, Dylan. Hi, everyone. It's great to be here. As Dylan just mentioned, today we're going to be exploring how Polkadot helps bring DeFi to 1.3 billion people. Why 1.3? It's a very specific number. So who are they? 1.3 billion people is the quantity of people who are underbanked or unbanked. This number can vary between 1.3. The World Bank has it at 1.7. Other sources have it at 2 billion. But that roughly places the amount of unbanked people at about 25%, or 1 in 4 are unbanked. They are usually in remote locations, but in terms of countries, this can vary, and there are quite a few of them, as 1.4, as one quarter of the population would suggest. However, the highest amounts are typically in Morocco, or rather North Africa, Morocco, Egypt, Sub-Saharan Africa. In Southeast Asia, it's Philippines and Vietnam are some of the highest, and in Mexico for Latin America, but also other Latin American countries. They also happen to be the highest remittance recipient countries. A lot of individuals looking for better job opportunities go abroad, typically to, say, the Gulf in the Middle East, or they go to Western Europe or the United States or Canada, and these are hence the largest originating countries for remittances. So, you might ask yourself, why are they underbanked? And there are several reasons for this. Starting off with regulations and documentation, a lot of individuals are in far-flung locations within these countries where they have little access to finance, little access to technology, but also documentation. So not everybody has an ID. They live a very traditional lifestyle. They're born. They may be registered with the government. With the national ID, they may not be. Which, of course, with KYC, that does tend to be difficult to register with the bank. Regulations require, of course, and rightfully, that they are able to stem the flow of illicit funding for illicit activities, such as drug smuggling or people smuggling, as well as other activities such as terrorist financing. So KYC is important. However, it's very difficult to register, as somebody who may be undocumented within their own country. The other issue is also there's a complexity of financial services. So it's in the U.S., for example, the regulations have accredited investors. So you need to have a certain amount of liquid assets to be able to participate at certain levels within, say, an investment side of things. As far as, like, say, banking, it can be complex. It can be intimidating for a lot of people. Financial literacy can be low in these countries, and so they do tend to be intimidated by financial services, and generally there's a lack of trust as a result of that. And like I mentioned earlier, they are in remote locations, and banking. Let's say these remote locations might not have a very high income, and therefore banks are not really attracted to moving to these locations. You'll generally find a lack of bank branches, ATMs, and other ways that they can bank. So they usually have to go to the nearest big city, which can be 45 minutes to 2 hours away. Then you have the centralized financial systems. So these banks are centralized, and therefore a lot of decision making happens in cities, and they may have biases towards individuals in these locations, or people who don't have collateral, or they may not have a certain level of income. You may need a minimum amount to deposit, and so on. And then, and of course, credit history. So with a lot of countries, they may have a sophisticated credit reporting environment, but nonetheless, they may not have the collateral or that credit history because of their lack of access to finance. Or even if they do have the access to finance, they may not be able to be reported into an unsophisticated credit reporting environment as well, or underdeveloped. So a few obstacles there to overcome. And so for adoption to happen, there needs several things. There needs to be in place several things, such as, the first thing is there has to be a particular problem to solve. There has to be friction. So if you think of any sort of adoption of any new technology or tool, let's say a boat or airplanes, airplanes were adopted pretty easily, somewhat rapidly, what people would say, especially as the cost of buying a plane ticket improved. And the reason was there was a lot of friction to travel. So if you were to go to another country, let's say if you were going to from Europe to South America, that could take months at some point in time. Now, as the technology improved, it started getting faster. Nonetheless, nothing beats a plane at the moment. So planes were quickly adopted. Now you have a lot less people traveling by boat. So it has to solve a particular problem. And it also needs to be global in nature. With cryptocurrency, for example, it's cross-border. There are no borders, generally, at least as far as how it was initially designed. And so with a solution to this problem, it has to be region agnostic, or it has to have a global reach and have a local, a local aspect to it. And then thirdly, there needs to be clear regulation. So regulations right now, everybody here listening is, I imagine, at least somewhat aware of cryptocurrency, or maybe potentially working in the industry. And as you know, regulations seem to be coming in phases, let's say. So over the last few years, regulations have been put in place that have radically changed the industry, how we work, how the users interact, and so on. However, there's still a lot more regulation to come. In DeFi, regulations are not really too present. However, there is a lot of interest in it from a regulatory perspective, and they're looking to put that in place. A lot of people are also nervous about regulations, especially those working in the industry or users who have been doing very well with interacting on different platforms. And the reason is, there is a lack of trust, but there is also a concern that these regulations may not solve the particular problems that they're intended to solve. So smart regulation needs to happen. However, once these regulations do come in place, there will be change. However, there is also adaptation. Being humans, we are highly adaptable. We've adapted to a lot of different environments, and the financial sector is no different, and neither is cryptocurrency or DeFi. And so there needs to have clear regulations so that we're all clear in terms of how to operate and how to interact on the user side with these platforms and so on, taxation, etc. And then it also needs to tap into an emotion and improve lives. And I think these are tied together. So in our case, where we're helping or targeting to help the underbanked, this will automatically, of course, help improve their lives. DeFi will help improve their lives, ideally, and that will result in an emotion. And this emotion is what creates that repeat behavior, or at least a big factor in creating repeat behavior for users. And then it needs collateral. So there are two streams of thoughts here. There is within DeFi, as you know, traditionally not traditionally, we've only been around for 2-3 years, but you use collateral in order to be able to borrow more. Now, the amount of collateral required has been shifting in terms of how much you can borrow. So it's become better and better, but there's still a recognition that this is not the ideal situation to be in, especially for the underbanked or those who are looking to rise from poverty. So there are some, I've been speaking with a lot of projects who are currently looking into finding ways to have a credit reporting environment within DeFi platforms or within the larger crypto industry that can help track payment behavior and help reward individuals who have great payment behavior with higher volumes that they can borrow and lower interest rates. So A good parallel, no pun intended, is credit cards. So credit cards were not born in a day. Nowadays, you see them quite ubiquitous. It's very easy to apply for a credit card. It's very easy to get a credit card and use it. Most merchants accept credit cards, and you can basically travel the world with a credit card and expect to have it work in the country, your destination country that you're going for travel or what have you. But that was not always the case, as you can imagine. Credit cards were actually invented, decades ago. It took about 50 years to get full adoption, I'd say. And a lot of this was because now credit cards, as you know now, are frictionless, but back then it wasn't. So you had, I don't know if you, for those who are a bit older, you'll remember, back in the day, you had to put a credit card into this little kind of rectangular box, and then there was some papers, and then the merchant would swipe it like this and keep a paper copy, and then they'd cash it in almost like a check. But as technology improved, user experience improved, and that's a key here. And then it started to become more and more frictionless. So then communication networks improved, and now merchants were able to use once a credit card's used, the transaction details would be able to be sent to the bank, or issuer, and so on. And be able to be credited to their accounts. So it became a lot more easy to adopt. And then you had the credit side, which helped as well, that access to finance, and then the digital nature of it, of course. So, and then finally, the collateral, and that was on the credit reporting environment. But this is where that emotion started kicking in, and the user experience helped remove that friction, and payment behavior started being formed, and that's a key here. Polkadot, which is what we all came here to hear about today. So, how will Polkadot, provide access to finance or access to DeFi for 1.3 billion people? And this is really through a number of different ways. So, the first is interoperability. Polkadot has, by virtue of its technology, allows different parachains to build on top of it, and then allows for seamless interoperability. That is the vision. The vision is that, for example, with us, Parallel Finance, if you see the trajectory over a number of years, you'll start to see that we're moving into chain agnosticism. So, our vision is that, by virtue of being on Polkadot, we'll be able to leverage that interoperability so that users don't even have to care what chain they're on anymore. They're able to go for the most attractive, yields, or the quickest payment coin to transact, and not even worry about which one it is. And then the other virtue of Polkadot is the parachains. So with about 100 parachains, I think, segmented, or at least like blocked for creation on the Polkadot side, and currently I think somewhere between 12 and 16, we have each parachain is basically focused on solving a particular problem. So we can have basically within our ecosystem, each parachain working to solve their problem. And some of these are very, very applicable to reaching the 1.3 billion people and their audiences. Like, for example, access to internet. I've heard of a parachain working on that in a very innovative way. Others are working on money markets with very low collateral or low liquidation levels. There's credit reporting. There is, you name it. So privacy. There's, etc. So each one focusing on their particular problem, and then actually I'm gonna come back to that third one, because this one, the collaborative nature of it, is what is also one of the key differentiators of Polkadot. So as each parachain works to solve their particular problem, Parity has done an excellent job of coordinating the different parachains, having them work together, not just on an organizational level, but even on a departmental level. So like marketing, business development, and technology, and so on. And so the collaborative nature of it is basically where two different parachains focusing on very niche problems can come together and work on solving larger problems. And, so like this is, and not just two, but several, and so on. So this is a big differentiator. And I was at Dash for 4 years, and and realized this, this was not the case usually. A lot of cryptocurrencies are siloed. It can be tribal. Not to say Dash was, but this ecosystem is very unique in my experience. And then going back to point 3, collateral in DeFi lowers the need for credit reporting, which kind of contradicts what I was saying earlier, but this is still very important because the level of collateral, say in microfinance institutions or the microfinance industry, where they charge about 100 to 160% on a $100 loan, this is very taxing for these small businesses or rural farmers or what have you. They put up collateral such as their entire farm or their house or their livestock, and they typically lose it. And so because of the high interest rates. Now, the high interest rates are there because of the risk. And so what DeFi is able to do is allow you to borrow within your means. So when you have just a few coins, you're able to borrow more, and this can go a long way for a lot of people. And then innovation. I don't think I need to expand on that. I think this whole day has been about how innovative the Polkadot parachains have been, and Polkadot is itself. So I'll move past that one. But we do have by virtue of being on Polkadot, parachains have, again, pardon the pun, unparalleled security. So we all inherit the very, very strong security, which establishes trust, which reduces issues for the individuals, and so on. And then finally, the global local approach. So for example, with the June, Polkadot Parity is putting together a large conference in June, and that's going to be in 4 cities across the world, which is, I think it was Berlin, Mexico, New York, and Shanghai. And that is a global but local approach where it'll be available in their local languages and with issues that are relevant to those regions. Now, but there is still some work to do, and those areas are mobile first. So a lot of these regions do not, and areas of the world do not have access to desktop computers, which is unfortunately the main way of participating in DeFi. But the mobile approach, which they do generally have access to, would go a long way towards that adoption. And of course, education to address the financial literacy and also teach them about DeFi and teach them about what they can do with this amazing tool and how they can rise from poverty or at least get access to finance. And so I know we're at the top. I think I have a few minutes left, so I'll move this along pretty quickly. But on Parallel Finance, this is how we're doing our part. Our goal is to basically target this audience amongst others. So we have our statement as bring 1 billion people into DeFi. Hopefully it's 1.3, and we're doing this through a number of ways, which is easy user experience. I can't emphasize this enough. It is key. We need to make this as frictionless as possible. So we like to say internally, so easy your grandparents can use it. It's supposed to be very easy to understand, very easy to use, or else that is going to be an intimidating factor for people to participate. Even within crypto, I've heard this as being a common factor. Education, and I mean the larger crypto industry. And of course, education, which I touched upon, we are very education focused. So we have hired quite a bit of people to build content, to engage users and educate them. And then partnerships, of course, removing blockers. So for example, off the top of my head, institutional users, they need custody providers in order to participate. And so, we work with custody, so like that's something all the parachains are also working on, is removing these blockers to make it easier for individuals to participate. Language support and ambassador program, again, part of that global local approach, which is key. I won't go too much into detail because I already touched upon it. Targeting new users. So we're launching our NFT money market. I see NFTs as being a funnel and an entryway for new users, unlike say DeFi, which you have already a pretty good understanding of the cryptocurrency and trading and DeFi and so on to participate at this moment in time. NFTs are NFT users. Many of them are artists and so on, and they view blockchain or crypto as a means to an end. So this is a great funnel to bring people in and then introduce them to DeFi. And then the last one I'll touch on is on payments remittances. So we're working on payments and remittances solutions with our treasury management, DAOFi we're calling it. But at the end of the day, I think one key message to keep in mind is that DeFi is banking. It's just for everybody. And so with that, I thank you all for joining me on this in this presentation.